So you want to increase your profit, but actually you can't manage profit. You see, profit is just the thing that falls out of the end of the equation, the end of the profit equation. And actually, to remove profit, to increase profit, you need to look at the drivers of profit, of which there are 9. At its simplest level, profit equals your sales less your costs. But we can drill down into this equation a lot further. Now we have 9 drivers of profit, like I said. And out of these 9 drivers, there are 5 sales drivers, there are 2 cost drivers, and there is 1 special driver that I'll talk about in a later video. So starting with the cost drivers. Well, there are 2 cost drivers in your business. The first is your variable costs, and the second is your fixed costs. Your variable costs are costs that increase directly with your turnover. So the more sales you do, the more business you do, the higher your direct costs are. So direct costs can be direct material costs, direct labor costs. So for example, if you hire subcontracted labor, that is a direct labor cost. If you have fee earners in your business, and you're in the service industry, that is a direct labor cost in your business. It moves directly as turnover moves. So the more business you do, the more direct costs you need to incur to ensure that you can sustain the level of turnover that you have won. On the other hand, we have fixed costs, and they are otherwise known as your overheads. And your overheads generally stay the same, regardless of how much business you are or aren't doing. So examples of fixed costs are your rent, your rates, your insurance, your accountant fees, but there's a question mark there. You see, your accountant can either be an overhead, or he or she can be an investment in your business, which sits on your balance sheet rather than in your profit and loss account. So if your accountant is just someone who does your compliance work that you see once a year, then they're probably an overhead. But if your accountant is helping you to grow your business, to increase your sales, to increase your profitability, then they're an investment and they're returning you multiples over and above what you're paying them, in which case they go on the balance sheet. Anyway, I digress somewhat. So back to the cost drivers. When looking at the cost drivers of a business, you need to see where you can shave as much as you can to try and increase that bottom line figure. Now, there's only so much you can shave off your costs before you start to affect the operational effectiveness of your business and also the quality of service that your business offers. It's far more powerful to look at the sales drivers, and we'll be looking at them in the next video. If you want to read about the 9 drivers of profit and can't wait to do so, then download my free ebook called The Entrepreneur's Guide to Transforming Your Profits from the website www.transformyourprofits.co.uk. I hope you found that useful. If you have any comments, let me know in the comments below. If you'd like to be notified when I release the subsequent videos in this series, let me know in the comments below and I'll be sure to tag you when they come out. Thank you for watching. Bye for now.